What's up everyone, it's Caddy with Money Investing. In this video we are going to be talking about Apple stock, ticker symbol AAPL, which is now worth more than the entire Russell 2000 combined, which is the small cap index in the US. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, swing trading ideas, and of course, all the other benefits and private live streams as well. So link's going to be down below. So this right here was the catalyst. Now, stock market milestone. Apple is now worth more than the entire Russell 2000. Now, that's a pretty big feat because Russell 2000, which makes up over 2,000 of these small cap stocks here, is worth over $2.2 trillion. And Apple as a company now is worth a lot more than that. So the market cap of Apple has surpassed the entire Russell 2000 for 2 weeks, the longest stretch on record. And Apple's market cap, which measures how much the company is worth, crossed over $2.7 trillion and is worth roughly $100 billion more than the combined value of all 2,000 stocks in the Russell 2000. Just really speaks volume in terms of the valuation, doesn't it? Here, Apple is back to being the bigger than all 2,000 small caps in Russell 2000. The last time it happened, it didn't last long. This right here is basically a chart going over the Apple stock, which is in green, and we've got the Russell 2000. So I can't really seem to figure out when it happened last. Probably over here sometime in 2020, because 2020 the valuation was just insanely high, relative to its earnings back then and revenue back then. It did start to pull back, but it has continued to drift upwards. And of course, it's now almost back up to all-time highs. This right here is going to be that spread between Russell 2000 and Apple, which now once again is negative because Russell 2000 is obviously less than Apple. This right here is another chart, another way you can recreate that, which is RUT divided by Apple. And it's an all-time low right now. So this is the monthly chart. And what you'll notice is that it has obviously consistently come down since 1997, meaning that Apple has consistently outperformed all small cap stocks, but now it's trading at an all-time low, and for the last 3 to 4 months, it has also sold off aggressively, hence the new all-time low, hence Apple's valuation much bigger than Russell 2000. Now let's talk about valuation, right? Let's talk a little bit about what the valuation really is for Apple, because again, this is going to be a little bit more about the qualitative analysis, sort of like on Apple, but then also talking about the valuation. Is the valuation really justified for the company at these prices, or is this something that's more of a safety trade? Investors just flocking over towards Apple just because it's a stable, consistently growing company, right? That's what is the main reason for this love for Apple, right? That's what we're trying to figure out. Because look, I know it's hard to see, and it's hard to see for me as well. I get it, right? It's hard to see a world or envision a world where Apple is not Apple, right? It's not the staple of the stock market, because we have known Apple as being the best company in the world. The brand is phenomenal, the products are excellent, the management is capable, the entire Apple universe, the ecosystem is just perfect, right? No doubt about it. I've owned Apple products, I still own them, I'm an investor in Apple, so I love the company. But that's where the biases come in, right? That's why you start to believe that this company is immune to everything. You know what I mean? Like, that's where we start to get complacent, and my job here is to identify all risk. All risk. We're not going to eliminate risk ever, but our job is to identify them and limit them as best as we can. And for me, for Apple, unfortunately, the risk here is the value itself, right? The valuation, $2.7 trillion, very close to $3 trillion here. Is it actually worth that much? Or is it mostly a safety trade? Or is it mostly like a trade where people are just kind of sitting out on the sidelines until all this uncertainty kind of passes us by, right? What's the real reason? And if you take a look at the valuation, unfortunately, Apple right now, as of 2022 numbers, is trading at one of its highest valuation it's ever traded at. So this is the last, I don't know, like 12 or 13 years worth of history for Apple's valuation. And the green ones are basically highlighting some of the low valuations Apple has had over the years. Like, for example, 2017, it was trading at under 4 times sales, 17 times cash flow, 18.5 times price to earnings, a little bit under 13 times enterprise value to EBITDA. and 12 times cash. And if you compare that to where it was in 2020, just 3 years later, that was the highest valuation that Apple ever traded at. 38 times earnings. Can you believe that? 38 and a half times earnings, over 27 times enterprise value EBITDA, over 8 times sales, and 30 times cash flow. But even right now, even right now, as we have come down from those 2020 levels, and the reason for that is because the numbers have grown, right? We got a huge pull forward for numbers for Apple, revenue, earnings, everything grew, and market cap obviously didn't grow as fast as what we saw back in 2020. So, and from those levels, of course, revenue and earnings, everything else has grown faster than the actual market cap. So we have seen a bit of a pullback, and of course, we saw the bear market in 2022, so all tech stocks were selling off, including Apple. It was down, I think, 25-30% from its all-time high. So a little bit over 6 times sales is where we are. I think Seeking Alpha is a little bit different. They're suggesting for over 7 times sales. Price to free cash flow over 24, price to earnings a little bit over 27, and enterprise value to EBITDA at over 20. Price to cash are now trading at 15 times. So this is one of the highest valuation in comparison to where Apple has traded in the past. For example, if I take the averages over the last 12 years, their price earnings has roughly around 19 to 20. And that's where I really have seen Apple, as if I consider Apple to be like price to earnings in a valuation basis, like I consider Apple to be at closer to 19 to 20 times earnings, right? 19 to 20 times earnings with about 6 to 7 times sales has what been the general consensus, but of course the average is suggesting 4.3, a little bit under 5 times sales, and 17 times cash flow, and 19 and a half times price to earnings, which obviously we're way above that level at the moment. Now, there's a couple different tailwinds that are being priced in. By the way, this was the valuation a little bit more visually. You can see that 2020, we kind of peaked out at around those levels. We have still come down from those levels as revenue earnings have grown, but this right here is still much higher than any time in the past 9 to 10 years that we've traded for Apple's valuation. And Seeking Alpha has a little bit different. You'll notice that they've got 29 times earnings on a both trailing and forward basis. Price to sales starting at a little bit over 7, enterprise value to EBITDA over 21, and price to cash flow at a little bit over 23, 24 times that number. Price to book is just wild, isn't it? 45 times book value, just insane. So again, really the question comes down to, right, if Apple is justifiable at these valuations. I think there's a couple different tailwinds that Apple is kind of working with. Number one is its services business obviously is a huge component for profitability driver. Margins are very high. It's almost at 20%, 20% or 21% of its overall business, which actually increased from same time last year. The second tailwind is their initiatives in the metaverse, right? If they are going to be launching any type of AR, VR headsets, I think that's going to be a pretty big tailwind for the company to kind of push higher, increase revenue, increase its potential for more earnings. And finally, I think we've also obviously got artificial intelligence, and not to mention their move towards fintech with Apple Pay, and really just becoming a bigger bank. Like really, that's what it comes down to, right? Because the company's got so much cash. If there's one company that can disrupt the entire banking industry, it is Apple, right? Apple can actually become a bank if it wanted to, and rest assured, they're going to be focused on their other parts of the business, which is their core business, and not really focused on taking depositors' money and investing it to make more money, right? Even if they did that, they're probably going to do it in the bonds market, right? U.S. Treasury, and they're going to have plenty of liquidity, plenty of assets to sustain themselves, even though they hold on to some, let's say, unrealized losses on the balance sheet. So that's like some of the initiatives that Apple could consider, because that would give them so much money. Like people trust Apple with everything, right? So I don't see why that could be a problem. I would consider putting money in Apple if it were a bank, right? So those are some tailwinds I think that we have to really talk about. Those are some other stories that can be created around Apple company. Of course, metaverse with augmented reality, virtual reality, the headsets. We got fintech initiatives with Apple Pay, not to mention a potential bank here in the future. And then we've got the services business growing, the generative AI business growing, and then also one more thing, which was electric vehicles, which has been going on for such a long time, but we just don't know if that's actually going to pan out, right? Because we never heard anything officially. The Project Titan's been going on since the last 10 years, but we have little to no information on whether Apple is actually planning to enter this space or not. But nonetheless, for me, valuation, so if I were actually a new investor, like if I were personally getting started with investing or actually looking at Apple buying at these prices, I personally wouldn't, because the valuation is just a little too high, just historically speaking from a 5-year average, and just how Apple has progressed over the years. But it remains one of the most solid, most well-run, and most profitable companies in the world. So no doubt that it's trading at these levels. So it's really a question of what it deserves, versus what is justified. So I totally agree. I think Apple deserves its valuation and this milestone, but is it justified, right? Because those two things can be different, right? They don't have to be mutually exclusive. So that's where we are. I think resistance is going to be at 177 for Apple, and support level 157, 158, all the way down to 120s. And right now I'm going to probably start selling some covered calls here as soon as it starts to get even higher in the 180s. I will definitely be looking at selling covered calls, because I don't think that these moves are going to be lasting very long here, considering how much it's already moved up. And on the weekly chart here, we're definitely getting up to overbought levels for both the RSI and the MACD. But let me know your thoughts down in the comment section below. What do you think about Apple's valuation? What do you think about it being worth more than the Russell 2000 and some of the other business ventures that they are going to be branching out to? So let me know in the comment section down below. As always, if you enjoyed this video, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing. I'll see you all in the next video.